Welcome to Spidell's Federal Tax Minute. I'm your host, Catherine Zidane. This week we're covering some 2026 draft forms the IRS released, specifically the draft W-2, Schedule 1A, and W-4. We'll be covering all of the most recent tax updates, including these draft forms, new OBBBA guidance, and mandatory Roth catch-up contributions going into effect in 2026 at Spidell's quarterly federal tax update webinar on October 22nd. You can register for a full year of updates or just the upcoming session at spidell.com under webinars. The IRS has released early draft versions of the 2026 Form W-2 and related Form W-2C, the 2026 Form W-4, and new Schedule 1A for claiming certain new deductions. The updated forms reflect changes made by the One Big Beautiful Bill Act. The 2026 draft W-2 splits Box 14 into Box 14A and 14B. Box 14A will be used for other information, just as Box 14 was for taxable years before 2026. Box 14B will be used for employers who report qualifying tips to provide a tipped occupation code. This code is required to be used by employees to claim the deduction for qualified tips. The new W-2 instructions also provide codes for Box 12 for Trump account contributions, qualified tips, and qualified overtime. The IRS is treating 2025 as a transition year for employer reporting of qualified tips and overtime, which is why the Form W-2 changes won't go into effect until the 2026 taxable year. The draft W-2 instructions reference new Schedule 1A additional deductions that will be used by taxpayers to claim the below-the-line deductions for qualified tips and overtime. The IRS has just released a draft of Schedule 1A. For the 2025 taxable year, taxpayers now have 5 separate deductions that are classified as below-the-line deductions, but that aren't itemized deductions. So it makes sense that the IRS would create a new schedule to aggregate them. The 5 deductions are the qualified business income deduction, the personal exemption deduction for taxpayers age 65 and older, the qualified tips deduction, the qualified overtime deduction, and the qualified passenger vehicle loan interest deduction. Starting with the 2026 taxable year, taxpayers who don't itemize their deductions can also deduct up to $1,000 of cash charitable contributions or $2,000 for married taxpayers filing jointly, bringing the number of below-the-line, non-itemized deductions to 6. The 2026 Form W-4 mostly mirrors the 2025 Form W-4, except that it's updated to reflect the OBBBA increase in the child tax credit from $2,000 to $2,200 per child. Step 4 on the W-4 is used for other adjustments to withholding. The draft Step 4B worksheet, which is for deductions to reduce withholding, is expanded to a full page to account for the new OBBBA deductions for qualified tips, overtime, passenger vehicle interest, and the personal exemption deduction for taxpayers age 65 and older. The expanded worksheet also allows taxpayers to more precisely factor in each of their itemized deductions, whereas the 2025 worksheet only asks taxpayers to provide a single figure to estimate their total itemized deductions. We covered this topic in a recent issue of Spidell's Federal Tax Letter, a monthly newsletter plus a searchable online archive of back issues that keeps you at the leading edge of the federal tax issues that impact your clients. You can get more details and subscribe at spidell.com under Publications. That's all for this week. Join us next time for another episode of Spidell's Federal Tax Minute.